Hello and welcome to this week's Accountancy Age Big Question webcast. In the news this week, the Treasury has finally spoken on liability for companies that mislead the market, and Arsenal put the brakes on their search for a new finance director. I'm joined by Penny Sukhraj, reporter on Accountancy Age, to talk about the Treasury statement. Not really a statement, more a subtle release of information, I suppose, on liability and how they intend to act. What's the story, Penny?
Well, essentially, Damian, the Treasury has put out a consultation document following the Davis report from last year, and this applies to the instances in which companies can be sued for putting out misleading and false statements. What is different is that they're extending their scope to include companies that are listed not only in the UK main market, but also on other markets such as Plus and AIM. And the scope is also going to extend to UK companies which are listed on other markets within the European Economic Area.
So that sounds like a bit of an extension, perhaps, from what people expected. But this has been in the pipeline for some time, hasn't it? That its history is lengthy.
It has. Essentially, there was not enough work done before the Companies Act 2006 to be able to include this level of liability regime. So essentially, more work has been done, more consultation has been done, and this week there was the first sort of semi-formal outing of the document hosted by Herbert Smith. One of the other interesting things is that it's also proposed, the Treasury has proposed to include sellers among those who can sue companies, and it's not only going to allow possibly for registered or mandatory disclosures to be which are inaccurate to fall within the regime, but also any disclosure that could be false or misleading or inaccurate.
Okay, so it sounds like a bit of an extension. It also doesn't just include misleading statements, does it? There's a delaying aspect to this as well.
Absolutely. There's also a segment of it that deals with dishonest delays. And in this case, the issuer must be proved to have either gained in some way or caused loss to another party by dishonestly delaying a statement. Okay,
Penny, thank you very much. That's it from the Treasury point of view, but there's other news as well. Arsenal had been expected to appoint a CFO, roundabout now perhaps. They've decided to put that on hold. I'm joined by Kevin Reid, reporter on Accountancy Age. Kevin, what's going on?
Well, we understand that the search for a CFO has essentially been put on hold. A couple of months back, the club announced it was on the lookout for a CEO and its first CFO. Accountancy Age understands that the club is actually going to look to appoint a CEO who will then make a decision about whether a CFO is required or not.
OK, well, let's get your vested interests out on the table. You're an Arsenal fan,
Indeed.
Kevin. Might you not expect a club, a business of Arsenal's standing to require a CFO? Doesn't this fly in the face of traditional governance and the governance we perhaps expect and want to see within football clubs these
Sure.
days?
Well, I mean, there are a few issues around the club. One is, in terms of its accounting, things are, I guess, relatively simplistic in that all it has to worry about are player valuations and property valuations. Obviously, it has a lot of property at stake. And so, I mean, that keeps their accounting relatively simple. In terms of financing, the previous MD of Arsenal actually got the club tied down onto some great interest rates in terms of its loans that came about from the development of its new stadium. So in that sense, a lot of the general accounting and finance issues are relatively straightforward at the club. Obviously, a company of its size, you would expect it, in terms of its board structure and for good governance, to have a CEO, chairman, and a strong CFO to talk about financial issues separately from the other parties.
There are some names in the fray for the chief exec role who perhaps could cover off more than one of these disciplines, though.
Sure. I mean, Alistair McIntosh has been linked with the club in some reports. He is the former CEO of Manchester City and has a strong background in finance. He is an accountant. And you could conject that if someone like him was appointed in that position, he may decide that he can handle the financial side of matters at board level, as well as having to, essentially not having to appoint a CFO. But, I guess in good governance terms, we would look for them to have that a board structure that would have a CFO there.
Thank you, Kevin. I guess we can expect you to watch the club every bit as closely as you have done in the past. That's it for the Accountancy Age Big Question for this week. We're back next week with more news and analysis of the issues that matter.